Hello, this is Japanese Economic Review Channel. Today, we're going to be digging into the December 2025 indices of business conditions, hot off the press from Japan's Cabinet Office. We're going to break down what these numbers are really telling us about where the economy is headed. All right, let's jump right in.
So, here's what we've got on tap. We'll start with the official assessment, then dive into the current numbers. After that, we'll look at what's behind those figures, and then check out the forecast for the road ahead. And finally, we'll wrap it all up and see what it means for Japan.
All right, Section 1, the official assessment. So what's the big headline here? What's the main takeaway from the Cabinet Office's report? And here it is. The official line is that the economy is showing signs of bottoming out. Now, what's interesting is this isn't actually new. It's the exact same assessment they gave last month. So that tells us that right now, the government sees things holding steady. Not really a big shift in either direction. So, what exactly are these indices of business conditions? Well, you can think of them as a big, comprehensive health check for the entire economy. The Cabinet Office basically takes 10 different key stats. Things like how much stuff we're producing, employment numbers, how much people are buying, and they bundle them all together into one single, powerful number that tells us how things are going. Now, to really get a grip on this, let's imagine the economy is like a car. There are two main gauges on the dashboard we need to watch. First, there's the leading index. Think of this as your GPS. It's trying to predict where we're going to be a few months down the road. Then you've got the coincident index. That's your speedometer. It tells you exactly how fast the economy is moving right now. Okay, with that in mind, let's take a look at our speedometer, the coincident index, and get a snapshot of the economy as it stands today. So what's the reading on that speedometer? For December 2025, the coincident index clocked in at 114.5. Okay, but here's where things get a little tricky. That number is actually down 0.4 points from last month, and it's the second month in a row that it's dropped. So that kind of begs the question, right? If the official line is that we're bottoming out, then why does it look like we're slowing down? But before we jump to any conclusions, let's put this in perspective. When you look at the chart here, which shows the index over the past few years, yeah, you can see those two little dips recently, but look at the bigger picture. It's not like we're falling off a cliff, right? The index is basically bouncing around in a pretty stable range. And that's exactly why the government isn't hitting the panic button just yet. All right, let's move on and dig a little deeper. Let's find out what's really going on behind these current numbers. So this really is the key question, isn't it? If the economy as a whole is supposedly bottoming out, then what specific things are causing the current index to fall? What's the weak link here? Well, the answer really is in the details. It turns out this drop isn't happening everywhere. If you look at the table, you can see the main culprits pulling things down are shipments of durable goods, think cars, appliances, and retail sales. But on the flip side, you can see that wholesale sales and the job market are actually in positive territory, giving us a little bit of a lift. So when you put it all together, the story becomes pretty clear. It looks like consumers are the ones hitting the brakes, especially when it comes to buying big-ticket items like cars and electronics. This current little dip, yeah, it's pretty much all about consumer spending. Okay, so that's our speedometer, what's happening right now. Let's switch gears and check our GPS. It's time to gauge the road ahead with the leading index. And what's our GPS telling us? The leading index for December 2025 is sitting at 110.2. And here's the big twist in our story. Unlike our speedometer, which was down, our GPS is pointing up. This index actually climbed by 0.3 points. But honestly, the really important thing here isn't just this one month. Get this. This is the 8th month in a row that the leading index has gone up. 8 straight months. And that consistent positive momentum, that is the number one reason why the government is cautiously optimistic. It's a huge sign of underlying strength, and it's pointing to better days ahead. So now for the big finale. Let's put all the pieces together, the present and the future, and figure out what this all really means for Japan. Okay, so let's break it down one last time. What's happening right now? Well, we've got a little bit of a dip, mostly because consumers are being a bit cautious with their wallets. What's the future look like? It's looking pretty positive, actually, with that leading index up for 8 straight months. So, the final verdict? That official assessment of bottoming out really does seem to fit. Even with this little current headwind, the stronger future outlook suggests things are stabilizing. And all of this leaves us with one final, really big question. We've got these positive future indicators on one hand, but lagging consumer spending on the other. So, what's it going to take to close that gap? What's the key that will finally shift Japan's economy from just bottoming out into a clear, undeniable state of improvement?
Thank you for watching the Japanese Economic Review. We look forward to having you with us again.